Okay, traders, a very good morning here on the 11th of September 2020. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, Trades Open Day. Let's go straight into it today. We're talking about how we can catch larger moves in the market. It has been a huge week here at Master of the Markets. 9.78% on the live trading room, 2.88% on the Elite room, 9.78. Let's take a look at what that is in total. I put it in the title, but I can't remember it now. 12.66% of upside. 12K in a week here at Master of the Markets. It's been a massive week for us, and primarily contributing to that is the CI Cash-in 4.0 TSL system, the primary trading stop loss system, giving us 8.22% of upside. And the two big contributors to that were the pound dollar short and oil short. As you know, we don't just trade currency here at Master of the Markets. We cross market across the globe. We trade all the world markets. So the oil trade that you're looking at here on my screen, we actually took this short from the close of this bar here all the way down to the around about this point here where we had it was 600 pips from the top. Just here is where we took our money off the table. 40.5 around about that region is where we took our money off the table. So all of this open equity we were able to capture out of the available open equity. We were able to capture 384 pips. That's 3,840 pounds in just that one trade. And then the pound dollar, of course, the big contributor again as well, where we took the trade off the table for 5 ATR, 525 pips from the top this time. And that was around about this point here, 129.54 we got out of the market on that one. So again, huge upside here on the trading rooms, on the Elite trading room as well. We also caught multiple trades using the PriRunners OE system as well. Euro dollar, Aussie dollar, the Euro yen, all profitable trades for us. Some of them profitable trades this week, and you can see here, yeah, big contributor again, pound dollar again coming in here, pound dollar, dollar Swiss. These all closed out for us this week. So you can see when we add up the Elite room and the live trading room together, 12.66% of upside. So we rocked it just there. So it's been a great week for us. What I want to talk to you about this week, before we go into the analysis of the trades, or we should go into the analysis of the trades in a little bit more detail, why we did what we did. But before I do that, I want to talk about catching the larger moves in the market. And obviously this week, the thing that's inspired this topic for me this week is the fact that we have caught larger moves here in the maket in real time here at Master of the Markets. How do we do that? So there's a couple of things you need to consider first. The first one is you need to be able to plan your stop loss properly. And that's one important thing. So obviously if you're looking to capture a larger move, the things that you want to be thinking about are, is your stop too tight? Is your trailing stop too tight? Is your initial stop too tight? You need to give the trade a little bit more breathing space to be able to actually catch a larger move, because the trade's going to want to breathe more. Potentially it may be one of those trades where it doesn't look back, like we saw the oil trade here on the market, or it may be a trade that accumulates for a while longer before it moves lower. And if that's going to happen, or if it happens partway during the move, you're going to want to plan your trailing stop loss in such a way where it's no longer too tight. You're going to think about having a more conservative stop. So the principle here is to have a more conservative stop. The principle here is accumulation can still occur partway down the move as well, before we get maybe a distribution bar or something like that. So if that's going to happen, then you need to be able to plan, and you need to be able to think of how you're going to keep a conservative stop. So obviously the magic here is in thinking about a stop that's not going to be too conservative where you give back all of your upside, but also not too aggressive where it stops you out. So start thinking along those lines for how, if you want to catch bigger moves as a part of your trading plan, then start thinking about how you can actually plan for that. So we have a mechanism here at Master of the Markets we roll out in the live trading room to doing just that, where we do keep the stop more conservative on certain strategies. So for example, the cash-in 4.0 TSL price strategy and the cash-in and the lift-off 3.220% OE strategy, both those strategies have a very conservative trading stop. We have another version of those strategies that has a more aggressive TSL. And because of all of that, then what generally tends to happen is you start to get a this kind of nice smoothing out of the drawdown curve, if you like, and that's really important. So that's your first thing that you want to start to consider. To catch bigger moves, you want to plan your stop loss properly. The second thing you want to consider and think about is planning your target, because target planning is really, really important. So in this oil trade that we caught here, so we entered the market just here. We actually exited the market, as I said earlier. Let's actually just check the journal, because then we can see exactly where we exited the market on any given trade. So yeah, 40.52 for 6.4% of upside. And you can see, first of all, just before I head back to the chart, you can see that I've actually taken 8 trades so far. As a team, we've taken 8 trades so far this week for September so far. 6 of them are losing, only 2 are winners, but the 2 that have won are huge. The average profit on those was 5.89%. They're massive winners. And the average loss was only 0.76%. And this is how we're able to catch bigger moves, but the stops obviously a little bit more conservative, so the losses, some of them are a little bit bigger, but you do catch the larger moves as well. And this is what we expect to happen now on an ongoing basis. So you can see here, for the oil trade, 40.52 is where we got out of the market, and that was this price level just here. Why did we use this as a target? Well, the answer to that is because what we're doing all the time, of course, is research. The trade research has been an important aspect of building these trading platforms, these trading systems and platforms so far. The data indicators and things like that we've built that help us to work out where we should be getting in and out of the market, and how we should be working with stop loss and things like that, have been critical in the development of these methodologies. So this is things that you definitely want to be thinking about. Okay, so that's good. Let's bear that in mind. Bear that in mind. Let me give you a way in which you can start thinking about how you can position your stop. So one of the things that we've done here at Master the Market is some research. And we've done research on open equity and research on cycle depth. Now, if you don't know what these principles are, go back onto our YouTube channel, definitely search for OE and search for cycle depth, because we'll have done videos on this in the past. And these videos that we've created in the past will actually show you what these principles actually mean. But what I want to show you today is how we were able to plan out this particular target. Now, some people are saying to me that, yes, you know, the trade, we got out at that level, we got all that profit, but why didn't we leave it? It could still go down much further. And the answer is, yeah, absolutely, it could go down much further. But what we're looking to do is get out a statistically proven place. So let me draw this out. So a good way of working out where your exit point would be to go on the chart and start thinking about how much do these moves actually run. So how much do these phases actually move? So you've got this phase here, you've got this phase here. So if I were to take these two phases together, so the first one has run from bottom to top here, it's run 2,000, let's have a look here, 2,593, okay, is the move on that, 2,593. Let's write that down, 2,593. Okay, now let's take the next move. Next move was only 643, right? Much smaller, 643. Then what was the next move? Okay, so the next move was this one, just here. The next move was 975. 975. 975 was the next move, just there. Okay, so where we have these moves that have come into play, what we could do is we could just take an average of these, right? So let's do that together here. Let's grab an average. So 2593 plus 643 plus 975. Take an average, divide by 3. Okay, I've got 1,403. 1,403. Now you can ask yourself the question: at what point do 60% of the moves go to, right? So you could grab all of these numbers individually and you could start making a table, and you could say something like, okay, greater than or equal to 100, greater than or equal to 200, greater than or equal to 300. And instead of just getting an average, which is what I've shown you here, 1,403, what you could do, another way of doing this, is by just grabbing all of these numbers and putting them into a box. So how many in this sample went greater than or equal to, so let's say greater than or equal to 1,000. So how many of the samples in this went to greater than or equal to 100? All of them, 3. How many greater than or equal to 200? 3. 300, 3. How many were greater than or equal to 1,000? Okay, well, only 1. And you could start to see where is the drop off on this. And where is maybe 60%, like I said, 60% of the moves? Where is 70% of the moves? Where are 80% of the moves? And which one do you want to formulate for your trading strategy, which may be looking to capture larger moves? So you can ask yourself all of these questions just by going back and doing the research. And that's exactly what we did. Of course, we've built tools which help us to make this much quicker. And we use these tools to gather the data very, very quickly in a short space of time. And that's how we're able to determine the targets that we use for certain instruments, for certain currencies. Obviously, there's a variance across different markets. Oil will have a very different cycle depth to something like silver. And silver will have very different cycle depth to something like the dollar index. And the dollar index will have a slightly different cycle depth to something like euro yen, which we're also trading along here on the liftoff strategy. So you can see that this is a good way of thinking about how you capture larger moves. You may want to go back and watch this video several times because I'm speaking quite quickly. I want to cram the content in. I want to get as much content in as I can to the session. I don't want to keep it too long for you as well. So that's the thing to go back and look at. Go back and ask yourself, how far did these moves run? What percentage of the time were they over a certain amount? And start to see what the patterns are in these trends. It's really, really important to do that. Okay, so that's with the topic for the day. As I mentioned, the analysis for today, 12.66% of upside for the week. That's our week in review, £12,600 upwards of P&L, of profit in a single week. So it's a great week here for us, Master Markets. Pushed up all of our equity curves quite nicely. We're expecting this to potentially continue on into the rest of the year. And looking to finish the year strong. And what we found often in the past, through research and through real life trading experiences, that most of the time when the first part of the year is quiet, first 6 months, the last 6 months tend to be a bit more aggressive. Generally speaking, we found that systems make the most money in the first 6 months of the year, but sometimes it does inverse. And it was like that, actually, I remember it was like that back in, I think it was 2016 as well. 2016 was a year like that, where the first half of the year, or it was either 2016 or 17, we'd have to go back and look at the journals, but the first half of the year was very, very quiet, and then the last part of the year was much more aggressive, and there was a lot more upside just there. So that was the idea just there. That's what to go and think about, that's what to go and look at. So some great opportunities for us this week. We shorted the pound dollar, as I mentioned. Current trades that we're running, we're currently long on the euro dollar. We're currently long on, we have a pending order long on the euro dollar on the high of this primary bar just here. Dollar Swiss, we're currently short on the liftoff strategy, so that's in profit already as well. The pound dollar, we haven't got anything new running. The euro yen, we're also long on the liftoff strategy here as well, because this was a primary bar. We had a primary bar actually on the liftoff, so we had that just there. That was formulating a new opportunity for us to the long side. So we are long currently on the euro yen. Let me just check that, because that could be a mistake. No, that is absolutely correct. Yep, we are long on the euro yen liftoff strategy, so we are long the market on that one. That's in current floating profit as well. And nothing else really new that's running at this time. So there are a few trades running, quite a few trades banked out this week. Great profit overall. Overall market analysis, there's a couple of interesting things happening. So oil could be on a longer term move downwards. One of the things we were looking for, I mentioned this several times, was the covering of that gap just there. And you can see that the market did cover that gap, and that's when it decided, after it covered that gap, that it was going to be accumulating a little while longer. Little spike here in manipulation to make it look like it was going up, and then boom, off it went. And that's exactly what we were waiting for. We were waiting patiently for this swing to be confirmed to the upside. Now, there's some larger moves here on the oil market, and there was some larger moves into the early part of this year as well. So it may be very well possible that this is going to be one of those large moves, may continue on for some time. So that's something to be on the lookout for. Silver has accumulated quite a bit here, large run up. It may take a little breather here, and we may see some open equity here to the downside as well. So be on the lookout for that, potential buy opportunities for the long term. Dollar index as well, again, lots of accumulation happening, and this normally happens before we see larger market reversals taking place. So there may be some real dollar strength coming into the market in the near short term if the dollar index were to go up. So do be on the lookout for that as well. So a couple of interesting things happening across the market. And I trust that you're all getting involved. Definitely be sure to subscribe to our YouTube channel for more great content like this, and click the notifications button as well. It'd be great to see you on board. Let us know what you want us to talk about in future market updates as well. We look forward to speaking to you soon. Until the next time, stay disciplined, follow your trading plan, keep trading like a master. Bye for now.